Okay, David Morgan, thanks for joining me.
Well, Jake, it's great to be with you. Thank you.
All right, so for those that do not know, which is going to be every single person, I value David's opinions so much and his expertise so much that I actually just the other day finished paying him a healthy amount for a consultation myself. So you guys are in great luck because you're getting this for free. And David's a highly sought after expert on silver, but also is a go-to person on investments, specifically when we have some economic problems and recessions. Would you say that's about accurate in a nutshell?
Yeah, I'd add on that a little bit, Jake. I've been independent for a long time, and I look at the resource sector in total. So although I'm known for silver, we've looked at, all the resources, rare earth elements. I was first on that story. The battery metals, cobalt is probably the first to recommend a cobalt company. So broad spectrum. I also started an energy report this year in January that features all the energy sector, meaning oil, gas, the conventionals, nuclear, but also solar, wind, geopower, and all that. So that's a separate subject, but I also write in that space as well. So the resource sector and the energy sector. I consider myself to be more of an expert on precious metals, however, than anything else. And
so before we get it, and what? Please go ahead. I'm sorry.
The macro picture, the reason why we're all in gold and silver.
Yep, that's what I was just about to get to. So let's go there. So your average person is listening to this and saying, what are these Stone Age idiots mentioning silver in this episode right now? And in order to paint the picture of precious metals, let's start at the macro trend of the United States dollar. The common theme right now is, you're even seeing it on Fox, CNN, all these, whether it's liberal or conservative, is 2020 recession, 2020 recession, 2020 recession coming. And often that takes a little while for the mainstream to get behind that. And it seems like everyone really is behind it right now. And let's start there with the economy, the current problems of the economy, the recession, and all that good stuff.
Sure. So the biggest fact is I like to look at anything that I think about from the top down. What does that mean? I like to think as big as possible, and then like a funnel, just narrow it down, 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 down. So the biggest problem with the system at large is we live a lie. And what is that lie? And the lie is that you could create something for nothing. I mean, anyone that has kids, and even people that don't, but would say, it's impossible to get something for nothing. Yet the entire financial system, or I should say monetary system, is based upon creating money literally out of thin air. So we're living this lie that we can get something for nothing. In other words, you can print yourself wealthy. And we all know from recent history, if you look at Argentina, you look at Venezuela, you look at Zimbabwe, you can't print yourself wealthy. If you could, Zimbabwe would still be the richest, place on the planet. I mean, there's a $1 trillion bill. Was it a trillion?
That is
100 trillion. Okay, there you go. I forgot the denomination. And I actually gave one of these to my mother-in-law some time ago, and she kind of gasped, "Oh, if only it was real." It is real. This is real. But she got the idea that a lot of zeros meant it was valuable, but it's not. It's worthless. So you can't print wealth, but we're still.
And explain to someone that's never heard of. So I just finished reading When Money Destroys Nations, or When Wealth Destroys Nations, which was about the Zimbabwe hyperinflation. Explain why there's $100 trillion bill and how that, and on the inverse, how that is a similar pattern that the United States is heading down on. Obviously not as drastic as a scale as currently. What is that $100 trillion bill, and why the heck is it there?
Well, if you go back, it applies to your question of Zimbabwe, but it applies really across the board. If you look at the Great Inflation of France, there's several books you can read that are history. They're not fiction. But the idea during the hyperinflation in the Weimar Republic, which is a classic case, is the whole way up, meaning as the currency was depreciated and more zeros were added to it, the cry was there's not enough money, even though they kept producing more and more. But the reality is there wasn't enough value in the money. In other words, it took more to buy a loaf of bread a week, in 1 week in the future than it took for that given week. And this is what happens when hyperinflation really accelerates. Will we get to that point in the United States? I highly doubt it for a number of reasons, but we can talk about that later in the interview. But right now, the trend is that direction. And the Federal Reserve Board, anyone in the financial sector of merit, which is a lot of people, people that run these investment banks, people that run commercial banks, all those people are pretty well aware of the danger that we all face, and certainly don't talk about it publicly, but they have, it's in their consciousness. They're aware that there's a limit to everything. There's a limit to the amount of funny money you can print before there's repercussions. But right now, the US dollar is so well received by everyone else because it's the reserve currency of the world that, first of all, it's got a big base. In other words, everyone on the planet will accept dollars right now. And so it could take, some more time before we see a failure in the sense of a Zimbabwe or an Argentina failure where the currency isn't trusted. As far as are we failing or not, this is very simple to prove with the Federal Reserve Board's own data. So it was founded in 1913, and we're in 2019, so just over 100 years. And if you look at the Fed's own data, they'll tell you that the 1913 dollar is now worth about 3 cents. So if you have a child that is going to school and there's a 10-question quiz or something, and they get points because they're not multiple choice answer, they have to write out the answer, for example, and they come back with a 3-100, and they got 3 out of 100 points, you probably say that was a miserable blank failure. And I
saw that a lot on my test scores.
so thanks for the humor. So you would say that's a failure, and it is. It is an absolute failure. The problem is, if you want to call it a problem, is it's taken 100 years to get there. Now, if it took 10 years to get there, we'd all say it was hyperinflation. But we don't, because it took 100 years plus, a little more, to happen. So that's the trend. The trend is not really changing. Yes, it goes up and down, but that's the situation that we face. So today, where you're making, let's say, $35,000 a year, would have been unheard of just, in the 1940s when you could buy a house for $6,000. I mean, everyone, with that amount, those many zeros would be wealthy as all, get out, but they're not. And 35,000 these days is, making a living. And certainly I'm not trying to, categorize anyone or anything. All I'm suggesting is that the number is a lot bigger number, but doesn't purchase what it used to, let's say, 40, 50 years ago by a long shot.
And would you summarize that as the reason being that the Fed now, since 1971, now James Rickards likes to say, it's incorrect. They suspended the gold standard. Whether they suspended it or took it off doesn't really matter. At the end of the day, in 1971, we stopped using the gold standard either because it was suspended or because they took it off. And then since then, they printed more and more and more and more and more and more and more money. They've also artificially kept the interest rates down as well, and which has made it easier to borrow money, which has brought even more money back into it. And because of that, is that so my question, in one, yes, you're nodding your head like that's an accurate summary, but is that a real problem? Is that something that can just go on forever?
Can't go on forever. I mean, that's my point. But then everyone wants to know, well, if it can't go on forever, then it's like Jim Riggers likes to state, well, tell me, 2 days before it blows up so I could, move my assets out of real estate into gold, or tell me, a day before so I could take all my money out of the stock market and move it into gold. And, it's ridiculous because no one knows, but I think we're getting closer by the day. And it's better to be 6 months too early than 6 minutes too late. In fact, I think when the rush to gold starts this time, that it may be difficult to get in. And a lot of people see it moving so fast, they'll be scared to get in. They'll say, oh, wait, it went too high, too fast. I'm going to wait for a pullback. And that pullback never comes. And once you get a runaway price increase like that in the gold market, that's forecasting you've got real problems ahead in the general economy.
So explain to somebody who's unfamiliar, because one thing Rickard says is either you went to school before 1971, so you learned about gold as currency, or you're, if you know anything about it, other than that, then you're self-educated, and in the average person, we aren't taught this type of stuff, and we don't know gold and silver seem like a barbaric relic. And why is something like that important as people are losing faith in the United States dollar?
Great question. And certainly I've answered it before. I'm trying to use my brain to make it very simple and elegant so everyone gets it. But so if we look at the truth of the matter, you can't print wealth if you take that as a foundational argument. And then you look at a piece of gold. Gold's a constant. An ounce of gold is the same anywhere at all times. Its mass is the same throughout the universe. So that's the constant. So people say, well, gold's too volatile, it moves too much in price, and it's unstable, and on and on. No, that's the opposite. Gold is stable. What's unstable is the price of gold, which is dependent on the faith in the given currency. If it's in anything but the United States dollar right now, just about 73 countries in the world right now are hitting all-time highs in their gold price in their currencies, not in the United States dollar. So think about that statement for a minute. Then on top of that, the reason gold was used as a gold standard is, and everyone knows the gold standard means something. What does it mean? Well, it usually means it's the best or whatever. The idea is that it stabilizes the currency because it's a constant. But it really doesn't if you study monetary history, because man or humans get into the act. In other words, they will print more paper than's covered by the actual gold reserves, which is what the United States was doing up to 1971 when Nixon temporarily suspended the gold window. What was happening is the contract read that you could take these pieces of paper that were printed by the United States and exchange them at $35 per to get an ounce of gold. And Jacques Ruff of the finance minister, or at least something along those lines, I don't know the exact title, that worked with Charles de Gaulle, said, look, Charles de Gaulle, these U.S. people are shining us on. They don't have nearly the amount of gold to back the dollar that they claim. They've been printing like crazy. So let's make good on the contract. So they started making good on the contract, and that's when Nixon's advisors said, you better close the gold window, and let's just say temporarily, because that will quell the markets and no one will have a real big problem. Most people heard it, didn't even think about it. There are a few of us gold bugs that did, but the general public didn't realize the importance of a stable currency. Remember, the mandate for the Federal Reserve was to have a stable monetary policy. In other words, to keep the currency strong and sound, like a gold standard usually does, until they start fibbing, which usually happens eventually. But their mandate was that. So if it were true and they lived their mandate, then $1 in 1913 would equal $1 today. But if we just explain it's worth 3% of what it was when the Fed was founded, yet they all tell you they're doing their job, and they are not.
So let's talk about recession, whether it's in 2020, 2021. Nobody knows. I don't like to pick numbers, and I know that you're also not huge on coming strong on a timeline. We know that the trend is moving towards a lack of faith in the United States dollars. How do you get rich during the next recession or depression or whatever type of adjective somebody wants to use to describe the coming financial problems? How do you get rich?
Yeah, that's a great question. Well, the way you get rich is you determine something that the market needs, and it's not a want, it's a need. And you fill that need, and then everyone buys it, and you're going to get rich. That's what you do. So there's the real answer. As far as on an investment perspective, really you want to lose the least, because in a really big recession or / depression, which Doug Casey's pretty famous for coining the phrase, will be the greatest depression, greater than the 1930s. Now that remains to be determined, but I'm trying to prep the audience for the idea that when you have a currency crisis, the word crisis is pertinent, which means that it could be more than just your, oh, I lost my job. It's like everybody on your block lost their job, that kind of thing. I'm not forecasting that, but history teaches that's probably what we are facing. So with that in mind, he who loses less comes out best, but there will probably be a run to gold and silver that I expect could, not only keep your purchasing power equal to what it is today or greater, but the possibility of it actually going overvalued is very likely. It's very highly likely. And the way you do that the best is you get into the underlying mining equities, because they are multiples of what the price of gold does. So if gold goes up 200%, most top tier gold companies will go up 600%. So now it is a paper asset. It's not gold itself. It's a company that mines it, but it still has that kind of leverage because of the way the system works with the profit to a corporation. So that's the way you could actually, let's say, take advantage of the situation that I'm outlining, and that's based on the idea that I'm right. Obviously, the vast majority of us in the investment community look at a lot of the ideas that I have, along with, say, the Peter Schiffs and the Jim Rickards and some of these other well-known personalities, as being rather fringe. And in some instances, that's true, generally speaking, until we get in the times that we are right now, which is the end of the age of empire. This is when the empire starts to collapse. And what concerns me the most, if you look at my early writing from the early 2000s, when I was writing often for the public domain, not as much anymore, I said what concerned me is it's a global phenomenon. This isn't the Weimar Republic where you were in Germany and you could have left for Austria, or you could have gotten the Austrian currency, or you could have done the Italian lira. You could have protected yourself in one way, shape, or form. This time when the dollar goes, almost everyone goes, because it is the reserve currency of the world. And most of your banks across the world have dollars as the reserve. So if those blow up or go into smoke or are not accepted, or are have any of these issues that will probably or could potentially take place, it's going to affect just about everyone.
So how do you respond when someone listening, or just your average person that has never really looked at too much into maybe the person listening, which is a very common thing. The most popular YouTube channels in personal finance are millennials, a little bit older than me, that either made their money in real estate, and they talk about put $5 a day into your Roth IRA and you're going to be rich. You're going to have $17 trillion and it's only going to take you 14,000 lifetimes. And they would say, one, you're wrong. Two, you're very doom and gloom and you're being very negative. And they would say, three, why the hell would I ever take my US dollars or US stocks that are booming and my real estate that's booming, and why would I put it into gold, silver, and the subsidiaries being the exploration companies, the mining companies, and putting it in stocks, but putting it in the stocks that have to do with the mining? What would you have to say to all that?
Yeah, that's a great question. It's pretty easy to answer, basically. I'm not an insurance salesman, but the idea is, like, you can.
I am. Anyone want insurance? Just joking.
You have insurance on your house. You have insurance on your car. And this is a situation where if you think that I'm wrong, and you can make a case that so far I have been, although we've made a lot of money in the equities and we've lost some as well, but overall we've done quite well. But the point is that you don't need to put everything in there. If you think I'm full of it, but something resonates with you, you think, well, he's 99% wrong, but my gut tells me that, maybe he's 1% right. Well, I'll put 1% in the precious metals. Now, the standard's about 10%. 10% will make up usually for if everything that you own goes to zero, and it won't. But let's say that you are a real estate stock investor, gun-ho the economy, Trump is fixing everything, nothing's ever been better in your life, and it's only going to continue to get better from this point forward. If that's your attitude, God bless you, you're wrong. But you can think so what you would do if you put in 10% is, if I'm right, and I believe I am, and let's say 3 years from now, if things really start crashing, your real estate won't become zero and your stock portfolio won't become zero. But that gold position of 10% will probably go up not only tenfold, probably 20-fold. So it'll protect everything that you own, and you'll still have a much higher net worth than you had. So it's basically, I don't like, again, the word insurance, but it is pretty much an insurance on your overall portfolio. I prefer the word hedge. And this is, people are mostly followers. There are very few leaders. I mean, when a leader starts when the lemmings, or let's say the cattle, are moving together in the mass. In other words, the whole herd is moving one direction. And that one cow takes off to the right all by itself. It's a very lonely trek. All the other cows are looking at that one cow saying, what's wrong with him, man? What they don't realize is that's the leader. That's the one that sees a different trail ahead and knows that there's danger in the direction that the herd's moving. And those people are usually ridiculed in the beginning. And they're not really known to be what they really are until later on. And so this is the situation of human nature. But once the cows start to see that, oh my goodness, there's a fire up there and that guy that took off is right, let's go follow him, then you get a big stampede moving into the direction of safety. So that's a metaphor for what I see happening. It's a metaphor for how people react. People don't like being first. They don't like being the lone wolf that is out there scouting around. They feel comfortable being in the middle of the herd and doing what everyone else is doing. And unfortunately, or fortunately, I didn't set it up. That's the way people think. That's the way people react. To be a contrarian like yours truly is not only unusual, but especially at the age I began at 11 years old, is something that is abnormal. So you could call me a bit off.
All right, weirdo. So right now we're seeing gold and silver moving up quite substantially. Gold's hit some new highs, and the economy is still quote unquote strong. And I put it in quotes because they're still saying jobs are so great, and then everyone gets all hyped up on low interest rates and they're like, oh, I should go buy a home right now while interest rates are so low. So things aren't quote unquote bad, but gold and silver are starting to make a little bit of breaks. What do you think about that? I kind of, going off your last point you just said a moment ago about people don't want to be first to something. And it is ironic to me that we haven't seen too much bad things in the economy yet, but we're starting to see a pretty significant move in metals. What do you think?
Yeah, actually, well, I'm a pretty good market student. In other words, I've studied markets my whole life, and I continue to learn more. I'm far from a know-it-all. No one can, but I still, study markets, movements, psychology, anything to deal with human nature and the financial system. So usually markets anticipate the future. So that means that gold is at a 6-year high today because it's anticipating what the economy is going to look like a year or two out. Which means that, if I'm right, it's going to look a lot different. The contraction will continue. You'll have trouble getting some goods that we take for granted right now. I think you're going to see a substantial increase in the price of food, and Americans pay attention to food prices and gasoline prices. So that'll affect almost everyone because they'll say, geez, I don't believe the Federal Reserve Board anymore that inflation's only 2%. Well, according to their metrics, it's only 2% because they take food and energy out of the equation, the two things you need the most, So that's what I see. And it's pretty well provable that markets anticipate the future. So gold's basically signaling right now at a 6-year high, which is, it is a 6-year high in the United States dollar terms, but it's a far cry from where it's going. I mean, I think gold could easily double from here. And that would be substantial, especially if prices were cut on, let's say, real estate, some of your investments that are leveraged due to low interest rates.
So if people started pulling out of those, then obviously they're going to park their money somewhere. If there was a dip in the real estate market and or other investments, if interest rates rise or whatnot, and so people start pulling their money out, is what you're saying.
Exactly. Yeah. I mean, if you look at most of your financial markets, they're based on the low interest rates because there's so much leverage, or as the Brits say, gearing in the system, which means that you buy real estate on time and you get a 30 or a 15-year loan and you put up, whatever these days, I'll make up a number, $40,000 to buy a $400,000 house. So you're borrowing, 90% on that. And that works great as long as the house continues to move up. Yeah. Well, let's say the house goes from 400,000 to 200,000, which is what happened to my sister in Reno a few years back. And these things do happen. Don't tell me they don't. I'm too old to tell you that real estate only goes up and the stock market only goes up. So this is then the opposite occurs. That leverage works against you significantly. So this is what we are facing.
Why would the price of goods go up, like food go up? Is that because, well, tell me why that would go up if interest rates are down?
Because it's a need. It's a commodity. Everyone eats. It's not just a habit. And there's substantial dislocations within what happened in the Mississippi Valley throughout the main states that grow food in here. And then there's this army beetle that's taking care of a lot of China's growth in foodstuffs and in the hogs or in the pork. So we're getting a shrinkage in supply. It's really that simple. And, with 7.1 or 2 billion people to feed, if you get a substantial breakdown in the amount of food that's growing, and then coming back to the Mississippi Valley, some of those areas that were flooded so bad took out silos that stored excess food. So when you store wheat or corn or barley or anything in those big silos, that's a reserve. But those reserves are taken out, not all of them, but a substantial amount of them. So we're in a situation where we haven't faced it a long time. On top of that, you've got, this weather situation that's changing. Weather always changes. But the point being is that some of the better growing areas haven't been as good as they have, let's say, in the past. So it's something to
how long will they keep interest rates down, and why would they want to eventually stop artificially keeping them down?
I don't think they ever want to artificially keep them down. I think that the Fed had its way to keep them down for as long as they possibly could. But unfortunately, or maybe fortunately, the market actually can overpower the Fed.
Okay, understood.
Yeah.
And what that would mean was that the people that are taking out the United States treasuries and bonds start losing confidence in it. So then to keep people invested in those, they have to increase the interest rate so there's a higher yield on that. Is that what that means?
Yeah, exactly. It's the interest rates, the reciprocal of the bond price. So as prices go higher, interest rates are down. As interest rates go up, prices go down. So if there's a massive amount of selling pressure in the real estate market, does that take the housing price up or down? It takes it down. So there's a massive amount of selling in the bond market because someone gets spooked or wants it to cash or wants to put it into gold or wants to put it into soybeans. Then that will force interest rates higher. And the Fed can't really do a lot about it if it gets that significant. And I believe in time it will.
Got it. So I'm going to carry on with a few more questions. But for those of you listening, there is a link down below. And obviously, as you can tell, David Morgan is someone who I love a lot, who I paid personally, and he has something called the Morgan Report. And this is a fantastic way in order for you to leverage David's skill set, the other investors and traders on David's team that are keeping an eye on the United States dollar and all these ins and outs that you and I don't have time for. And right there down below, you'll see a link. And it's a fantastic way to essentially have David in your pocket and have his mentorship available on whatever scale you feel comfortable with. Like he said, if you think he's 99% wrong and only 1% right, or you think he's 10% right or 50% right, it's important to have a little bit of that hedge on whatever capacity you feel comfortable with. No one's trying to convince you to do anything you don't feel comfortable with. But even if it's 1%, David is and has been throughout time someone who has protected not only himself but his clients greatly during economic downturns. And this is an opportunity for a very small fraction of the fee to be involved and to learn from David. Is something that I do as well on the top of consulting with him. And you'll see the link right there down below. So I wanted to plug that before we continue on. So go ahead right there down below and you can check the information out.
Great. And I'll just add to that briefly, Jake, but there's a free service available to anybody, and I give out the interviews like this one. I do a weekly perspective on my own where I look at economic news that most people can't find and make it usually 10 or 15 minutes. I usually end that sequence with some comment about the gold and silver markets. So it saves people a lot of time and kind of refreshes the reality, which has been a main theme, is the global economy is contracting, not expanding. So there's that. And then if you're really serious about how to leverage money in this field, as I mentioned earlier, it's through the resource sector by buying the underlying equities. That's the best risk to reward profile. But as a paid member, you also get to look over my shoulder and see what trades I'm making. And further to that, you get to ask, 2 questions per month. I'm not sure how long I can keep that service as this subscriber base starts to build back up. Maybe I'll limit to 1 question a month.
I was thinking we could get a robot, like a duplicate robot of you.
Well, I do send it off to the staff. I mean, it's not just me. I mean, I've got some, help on the equity side and some help on the, going to these mining sites and visiting them and filming them and then doing the interviews and doing the write-ups and that type of thing.
So it's a fantastic paid service. So it's right there down below. You'll see the links. You can check out the free or the paid version. So just want to discuss that. Now, David, what do you see as the end game here or a possible solution? One of the reasons, that I told you a little bit about when you and I were talking off air on our consultation session, when I was 19, I wanted to know in economics class why we couldn't audit the Federal Reserve. Teacher told me to shut up. And I got very angry. It was actually a really dark time in my life. And then I found personal development, and it brought me that spiritual freedom, and it renewed my optimism for life. It connected me to God, my purpose, all those things. And that led me on the personal development industry for a while, and it's recently looped back around, which is why you and I connected. But even for me, it was very scary, and it's very much like, wow, this world is screwed. And I think that keeps a lot of people away, even if it means that it harms them in the long term because they aren't hedging against the depreciating value of the United States dollar. What do you see as the end game, and what do you see for somebody who says, man, you're a scary person, David. These conversations are scary things. You seem like a nice guy, but this is very scary and it's very intimidating, and I don't have time for this.
Well, I think the best way and the only way really to face any problem in life is to, one, clearly understand what the problem is. If you can't articulate the problem in exact terms, then you really can't even start to find a solution. So what is the problem? And the problem is, as stated before several times, you can't print wealth. You can't get something for nothing. So that's the problem. Now, how do you rectify that? With the gold standard, you've rectified it immediately because you're giving something that has intrinsic value in trade. So if you're importing soybeans from another country and you pay them in gold, you're trading commodity for commodity. Or if you're importing software for gold, you're importing intellectual property for something of real value. They both have real value. But when you're on the system we're on now, you basically have at your fingertips the ability to have a credit card and buy anything and everything that you want and really not have to pay for it. So that's the problem. The solution is to come back to the truth. And the truth is you can't get something for nothing. So what do you use? Does that mean we go back on a gold standard? Not necessarily, but we could. But we need to get aligned with the truth. And the truth is that we are living beyond our means and have for a very long time. So I think this will be not only a recession, but probably something greater than that. But it'll be a trial by fire for not only the financial system, but the spirit of humanity at large. I think it's a very, very much connected situation where we're looking at not only the financial system, but the spiritual maladies that's plagued the, let's say, entire planet. So I like to say, as you know, since you consulted with me, it's not what you have, it's what you have. So there'll be a lot of people that have stuff. Maybe they have a big pile of gold, but they have nothing internal. They are so weak as far as what their human spirit is that the financial system collapsing, whatever that means to you, will be so significant to them that they've identified so much with the amount of money they have or their real estate holdings or their business or whatever that they won't be able to handle the pressure. And on the other hand, there may be people that don't really have that much externally, but have a very strong spirit that will come through actually rather majestically. So it's going to be a trial, I think, of both for a lot of people. I don't see a lot of dislocations in the society at large, although I see some. I think in larger cities, where there's been, let's say, a great deal of entitlement issues with the welfare state, when the things start to really finalize and you're not getting as much for your stated EBT card or whatever, this will absolutely cause some anger and probably cause some disruptions. But I don't think it'll last that long. I think that it'll be kind of a quick in and out, and there'll be a lot of damage temporarily, and then it will subside. I really believe in the human spirit that overall people will rise to their best when times are hard. And it may be a cleansing, not only of the financial system getting back on track, but hopefully the human condition getting back on track. We're a lot more alike than we are different. People have forgotten that. I am not a Trumpster, believe me, I am not. But I also have to give credit where credit is due. And in my opinion, he's trying to say, look, we're a nation of Americans, regardless of our faith, our sexual orientation, our religious beliefs, or what our age is. We're Americans. And I think he is trying to send that message, but the other side seems to just do nothing more than look at everything that's different about all of us. When it comes down to it, we're all human. It's a human problem. It's not a race issue. It's not a monetary issue as far as how much money you have or don't have. It's not a religious issue or a sexual orientation issue. These are human problems. We're all humans. We ought to start looking at it, I think, from a broader perspective.
I love what you just said a moment ago about how when this topic is discussed, it's primarily discussed from a purely fiscal standpoint. And one of the things that, if you are, which my audience and a lot of, especially my existing audience, has a very spiritual background and connection. And I think one of the things that's interesting that, so far of all these interviews I've done, you're the only one that's talked about that, and I find that interesting and kind of gave me the chills, was it's not just a fiscal thing. This is also, if you look at this from a very universal or cosmic perspective, it's almost as if that this higher universal power, whatever you want to call it, God, or just the spirit of humanity, because we're here for evolution, created this financial situation to, in essence, cleanse part of our egos that have developed such an attachment to the world of form. And in that process, we've not only forgot who we are, we've thought we're our bodies, we thought we're our bank accounts, and we've forgotten what really matters most in life. And in some ways, this may be actually a spiritual aid that can reconnect us more to our non-material essence.
Well said, and I agree. I really believe that it goes hand in hand this time.
All right, this turned into a spiritual sermon, and I'm loving it. All right, so what's a solution if we don't go to a gold standard or something like that? In conclusion, I have one more area that I want to go after this. But what is how do you have a solution to this unless it is a gold standard?
Yeah, if you believe what I believe, that money is power, and power is about controlling money, then you realize that the elite bankers have not only the ability to create money, again, out of nothing, but they have power over people. Unfortunately, in today's world, most people can be bought. In other words, you can buy your senator or Congress critter or politician or whatever, and you can buy people on the street. And a lot of times, I'm not going to fault them, but this is the situation at hand. So if money is power, you got to get the power back to the people. And so how do you do that? Well, some people argue cryptocurrencies puts the money power back to the people. I see that somewhat, but I still have my suspicions about the true nature of most of the cryptocurrencies. So the bankers seldom lose. So they're already looking at, what they can do. This Carney character from the UK has already said that he thinks we should, do away with the US dollar as the reserve currency and go to something like what is being proposed by Facebook as a cryptocurrency as a global basis for the monetary system. I am highly on record against that.
So do you think that what I said to Peter Schiff was, look, Peter, I like the idea of gold. I don't think it's going to happen. Why would they do that? In theory, Rickard says the same thing. And I agree on an intellectual and rational standpoint, 100%. But I have very little faith in the established elites and the banking systems and many of the families that run this world that the average person has never heard of. I have very little faith that they would ever do something like that. And so are you saying that it's possible that, because the essence of cryptocurrency and blockchain, what people are talking about is right. It's the same essence of gold and silver in that it can be a tool that keeps you away from the centralized establishment trying to control. So are you saying that you think that what they would try to do before even instituting a gold thing is try to basically prop up a digital currency system as a solution and say, hey, this is the answer? Is that what you're saying there?
Yes, exactly. And if you go back, I've only written one article to my memory on Bitcoin several years ago, and I stand by it. I am a pretty deep thinker, and I'm far from perfect. I'm human. But it's called My 2 Bits About Bitcoin. And in that article, and if you look at when it was written, Bitcoin wasn't nearly as well known or popular as it is now. And I said, look, if this thing really does take off, which it has, then governments hate competition. They've got a monopoly on making something from nothing. So they will put the kibosh on Bitcoin eventually, meaning, outlaw it. I didn't use those words in the article, but I basically suggested for your thinking that, look, they'll suppress it if they need to. So what could happen is that this Carney character is right. They come up with, well, this altcoin, all these cryptos are banned. I'm not saying
you think they'll say all the stuff that may be good, they'll say it's out of here. And then they'll say, but the concept is great. Let's do a centralized issue.
Yeah, as long as we're in control of it, we don't care if we're controlling. I mean, like Rothschild has supposedly said, I don't care who makes the laws, just give me the power to make the money and all's good. And what very few people voice, and I haven't done it on your show, although I've done it on others, is like most people don't even think this thing through, meaning, oh, I'm a socialist or I'm a communist or I'm a this or I'm a that. Doesn't matter if you're Republican, Democrat, socialist, fascist, dictatorship, benevolent dictator, whatever the government form is, matters little. We all are on the same banking system. You think the bankers care if you're in Russia, China, the United States, South America, or Zimbabwe? No. Why? They don't care what form the government takes at all. All they care about is they have the power, and the power comes from the monetary base. That's what they care about.
So one of the things that people will talk about is essentially a false flag, right? Which is throw something up here and then problem, reaction, solution. So is one thing that I hadn't heard people talk about, and that was something that I wanted to bring up that I brought up with Peter and Rickards, because I think the idea of a gold-backed currency or just something that is actually backed makes sense, but I cannot see they're such, and I hate to use the word evil, but they're such evil people that I cannot imagine they'd be willing to say, hey, we messed the game up. We're so sorry. Now we want to help everyone and make sure that we don't do this again in 300 more years with a new currency system. I don't think they're going to do that. And so I think that you might be right. It's very possible that when people lose more and more faith, which they probably are already behind the scenes, have some ideas in mind of what they would want to institute. If they did come out and they said, hey, look, Bitcoin is bad, it's smuggling, and we're shutting it down. And then they shut down all the other ones that are like free market, quote unquote. And then they said, we're reinstituting a new one. What would you do?
Well, there's not a lot you can do. I mean, you can be an advocate like me, you can be outspoken, you can write about it, and you can not accept it. But one individual not accepting it and being that one leader out of, 200 million people has little significance.
Well, technically it would be 7 billion, because that's the other way they could bring everyone else into one digital global currency.
Well, I think that's their goal. I think they want no cash because it's anonymous. They want to track every transaction you make so it can be traced, tracked, and taxed. And I think that's definitely what they're shooting for. And the blockchain fits that perfectly, because once you're on a blockchain, it's immutable. It's there forever, and you can look it up forever. It's a ledger, so you can always find out what Jake did. If you buy that, I don't want to get you mad at me, but that magazine that you're 15 years old, and because you're 15, it's pretty interesting to you, but later on you regret it or whatever. I'm just trying to come up with something off the top of my head. You can't erase it. It's there forever. So,
and you could really use that actually to control, for instance, let's say hypothetically that David Morgan and Jake Ducey, which I would never do in my entire life, we ran for president and we got famous enough through YouTube that we could garner a lot of attention. And we had this whole plan, gold-backed system, doing all these things. They could actually go through your entire ledger system. I mean, it'd be a lot easier to technically blackmail a politician or someone running. Yeah, that's something that I didn't think about. I would say that my original thought was that we'd eventually have my hope was the same as Peter's, which was that we'd eventually have a happy ending gold system, but that now it seems a lot more likely, based off of my lack of optimism in the global elites, that they'll probably ban every cryptocurrency, and then because they're not going to go anyway. They would never go anyways and say, hey, Bitcoin is now going to be the currency. They would never do that anyways, just because they don't have the leg up on it. Right. They would have to reinstitute something they could 100% control. And even if Bitcoin was the solution, they wouldn't allow it to. They would have to tear it down to rebuild something else that they would say is better. Yeah, I don't like that.
Yeah, no, we really want to be able to be free, and we want to be able to control our own destinies, at least to some extent. And from an esoteric perspective, maybe we do, but from a monetary perspective, we certainly don't. So. Look, you go back to when I was your age. The idea back then was, finance. If you had a lot of money, you were free. You were financially free. You could not work. You could travel. You could build a legacy. You could start a foundation and start a school on, esoteric knowledge or on how the financial system really works. Whatever. You had all kinds of freedom. But now that isn't necessarily true, especially in China, because you've got the social credit system. So it doesn't matter how much money you have. That doesn't make you free, because if you don't agree with the government, you get a low social credit. And if you get a low social credit, you can't buy your way out of it. You can't buy property. You can't travel first class. You can't even get a plane ticket, depending on how low your social score is.
Jeez, I didn't know that.
So that's pretty close to what's going on with our credit score. If you got a low credit score,
you don't even want to talk about credit scores. I'm the funniest at that. I think that a credit score is how a poor person measures their worth, and it's so funny to watch. I always joke around with my wife, because when I first met her, she worked a minimum wage job. She was a couple $1,000s in debt for the first couple of years of us being together, but she was so high on her credit score. It's a 710. And I said, baby, don't you think you're measuring the wrong numbers here? Don't you think we should look at a couple other numbers? I said, I don't look at my credit score, and I'm relatively financially independent. And I've never met a person that is a multimillionaire or has financial independence that has ever brought up a credit score to me.
Right, exactly.
So, conclusion, Mr. David Morgan is big on silver. We've seen some moves also, although we saw a pullback here today. What do you anticipate from that? And specifically, if people are so high on gold-backed currencies and gold rising, and gold is such a more popular thing, why wouldn't I put my money in gold? Why would I put it in silver? Especially if there's a however slight chance that there is a gold-backed currency. You even got Russia and China buying all this gold, and then there's talks about them creating their own blockchain, and it brings in all the sanctioned nations of Iran and Venezuela and all them. It seems like the way the elites are moving is if it wasn't a totally digital-backed currency, it would be something to do with gold. Why would I want to buy silver?
Well, first of all, for the record, I think you should own both.
Okay.
But I think silver is certainly a better buy at this juncture, because the ratio right now is around 85-1.
Right.
Historically, the monetary ratio is 16-1, and the natural ratio right now, the way it comes out of the surface today, is about 9-1. So I think there's
9-1 in favor of gold or silver.
Well, there's 9 ounces of silver that's mined for every ounce of gold that's mined.
Okay.
So well studied on the topic, as you know, and I think that that's probably the best place. Also, if you look at it philosophically, silver is the people's money, and it always has been. If you go
And
back,
gold is like the elite's money, if you're looking at it philosophically.
go back to the Wizard of Oz, that whole thing is a metaphor for the Eastern banking establishment taking advantage of the Western silver situation. I mean, Dorothy's slippers in the book are silver, not ruby. The yellow brick road is the gold only standard. And there's a great article written that I don't have on my desk, but it's about the gold standard being one step to fiat. Because if you only have one metal that's controlled and you have a gold only standard, then it's a lot easier to move it to a fiat standard. Or you have bimetallism where both gold and silver are money. It's much more difficult. So the way to really take out the bankers is to all of us trade with silver only, forget gold for the time being, and make all our transactions with it. And in the report, by the way, and this is on the free report as well, I am an advocate for this load, which is a cryptocurrency backed by silver. So it's not only in the crypto blockchain distributed ledger situation, it is also silver back, so you can.
So it's kind of the same thing that you're seeing. Apparently, that Putin is experimenting, is utilizing the blockchain, but still having the blockchain still backed by a material good rather than the digital coin.
Correct.
Interesting. So I know you don't like to call shots, but I'm going to ask you on record here what you see over the next little while from silver. And I'm prefacing this, and I said that, and for the viewers, you probably saw David laugh a little bit. David knows this stuff, but he's a very modest guy, and he's called some shots, been right sometimes. He called the high of the last silver bull market up to just about 50. But at the same time, and starting to know David quite a bit, we spent a couple hours now talking over the last couple days, is that you aren't this big guy that's like, it's going to hit this time by this thing, and you aren't quite like that. But David was laughing because I'm playing with him a little bit. But where do you see it going over the next little while? And let's start there.
Sure. Okay, so silver is just now breaking through the 18 level, and there's what's called resistance and support in the futures markets. So I think you're going to see silver get pushed down below 18. It'll probably take a run going above it. I'm just using that as a general number. And then push back down and go through it again, get pushed down. So probably going to take 3 or 4 taps at the door, meaning that level. And it'll finally break through. That's what happened with the gold at the 1350 level basis the US dollar. So silver will follow, in my view, a similar pattern. Once it finally breaks through for the last time and that resistance of 18 becomes support, then you will see silver start moving up to like the 21 level pretty quickly. Will that happen by the end of the year? I don't know. It's possible. I'm about 50-50 right now here at the end of August, but we'll go higher. And remember, the last time that gold was at this level, silver's at about $26 an ounce. So silver's definitely underperforming at this point in time. But as I said earlier, will outperform in my studied view while this next bull market really gets legs. But these things take work. A lot of people are probably buying silver today thinking, 21's happening within the next 2 weeks, only to watch it trade down to 17 or 1680 or who knows, and then have to work its way back up. That's what I think will happen.
So why do you think silver's pushed down if last time at this price of gold, silver was, as you said, in the 20s? Why is it lower? Is it because only you think largely institutions are in gold right now? Or why do you think, or people just slowly, as time goes on, people think less and less highly of silver?
Yeah, good insights. You're correct really on both counts. Gold is much more of an established metal, although the banks would admit it public, maybe a few, but generally the banks like the gold market, and they were the largest purchasers of gold last year that they've been in, I think, since 2011 or something. So over the last roughly 10 years, they're the biggest buyers recently. Then on top of that, silver is, as I said, the people's money. Banks don't use silver as a reserve, or they do use gold as a reserve. So it's up to basically those very few free thinkers that look at silver as having a monetary attribute, and there's not very many left. So that means that when we had this alternative currency come out called Bitcoin, and then all the followers, a lot of people that are highly aggressive and not risk adverse, willing to take risk for offset gains, or take an adjunct situation where you have a high potential, moved out of their $30 silver, took their $15 for it, lost half their money, dropped it into a Bitcoin situation, and watch their value or watch their paper profit go up 10-fold, 20-fold, 100-fold, or whatever. So you had a lot of people sell back. So there was a lot of buildup in inventory of silver because it really had lost its shine, excuse the pun, but it had. And that buildup in the silver physical market took place in at least two years, if not longer. So that inventory was bought by market makers, and those market makers have hedged their position by going short in the futures market. So they're neutral to price. So if they were buying silver at 18, they were short at 18 so that they're neutral, because that's what a market maker does. And then they kept building inventory. So we actually have a fairly good size inventory in the silver market right now, because the retail buying in both metals right now has been rather significantly poor. Although the price has gone up, most of it's due to the futures and options and derivatives markets, the ETFs, but not people calling up their coin dealer and having physical metal delivered to the door. It's not taking place.
Interesting. So, in conclusion here, everyone who's interested, at least go ahead and if you buy what we're talking about, which is not very hard to see, that the dollar over a long period of time has slowly lost a lot of its value. And every single day, these idiots at the Fed and in our government are printing more and more and more money. Now, what this is doing is the same amount of hours you are going to work, 8 hours a day, and let's say that you make $2,000 a month, and you say, okay, it's great, or you're getting a slight increase of wage. What's actually happening is, for your same amount of hours that you're working, that money you're getting is less and less and less and less and less valuable. And so what we're coming to is a crossroads where there is a lot of different global and economic uncertainty, China, Russia, United States, and we're seeing a lot of questions about the United States dollar moving forward. And this is something that I've been personally interested in, and why I am now starting to turn these into interviews. And David is one of the foremost experts. If precious metals is something that interests you, I tell you, at least have an open mind and sign up for David's free stuff to really look at it. What you don't want to do is be the person that's 100% in on the United States dollar, no matter what. Even if you only get 5% in on metals, or you get 5% in on mining stocks, and you don't feel comfortable with metals because you think it's stupid, at least get 5% in, a couple percent in, or consider it in the market. And David is one of the experts. One of the reasons I like David a lot is that he's not an elite, and he was not an institutional elite as well. And so I think that gives David a unique position in the market. And so the free is below, the paid is below. I can tell you that I want to be prepared for this. I don't want to have worked my ass off for the last 8 years building my business, building my brand, and receiving all this United States dollars that I have and lose it all because I was an idiot and I said this is going to go on forever. And I wanted to be prepared, and that's what ultimately led to me bringing David on. So you'll see down below, as you can tell, David's a straight shooter. He's a genuine person, and the paid will have a lot of value, but the free is as well if you want to test that first before you signing up for the paid. And David also does consulting and speaking as well, which you can check out on his website.